Welcome to We Chat Divorce, hosted by Karen Chellew, Legal Liaison, and Catherine Shanahan, CDFA. Each episode, we sit down with divorce professionals and industry experts to provide insights and frank discussions about real people, real situations, and real divorce to help you achieve your best life post-divorce. This episode of We Chat Divorce is brought to you by My Divorce Solution, offering divorce financial planning so clients can secure the divorce settlement they deserve. Visit mydivorcesolution.com to request access.
Welcome to We Chat Divorce, brought to you by My Divorce Solution and hosted by myself, Karen Chellew, Legal Liaison, and Catherine Shanahan, Divorce Financial Specialist and CDFA. On these special explainer episodes, we answer the top questions about divorce, giving you confidence and clarity. We often run across articles that sparks a need for us to elaborate on, and that's exactly what we're going to do today.
Today, we're going to unpack an article that Morgan Stanley published titled 6 Financial Mistakes to Avoid. So let's get started.
Okay, so this article states navigating the division of assets in divorce can be a long and difficult process, and I'm sure many of you can relate to that. And today we're going to talk about how to avoid those mistakes and navigate with intention and clarity. So let's get started with mistake number 1, delaying financial planning until after the divorce is final. So we see this all the time, Catherine. I'm sure you would agree that, people approach divorce, whether it's mediation, attorneys, whatever, even kitchen table discussions with their spouse to talk about how can we divide these assets? And it's an emotional decision, right? I want this, you want that. This is what we have. Let's talk about that.
Well, when they say delaying financial planning, what does financial planning mean to you? Because it means planning out your strategy for investments, right? Like how much do you have to have invested in certain type of assets? What are your expenses? It's your whole picture of planning for your future. And I get the part of delaying financial planning until you see what your settlement is. That's smart. I agree with that. Because during the process, you go to financial planners and sometimes they look at your assets and they want you to keep certain ones maybe because that's where their book of business is going to manage it for you. And that's where they make their money. So doing it during the process can have a negative impact on your overall agreement because your financial planner isn't in your negotiations. So if they're telling you one asset's better than the other, that's good to know, but they can't tell you keep this one, keep that one if they don't know what your overall agreement is. And because we're so emotionally attached to certain assets, we feel like that's the one we want. For example, like the house. Oh my gosh, I need to keep the house. And do you know the impact to that? Do you know that you might be house poor, that you're giving up all your retirement money for that? And what your age is and what's the impact to your retirement planning and how long you'll have to work? So I like the idea of the financial planning delaying till after divorce so you see what your settlement is, but understanding what's the cost of the emotional value to an asset you might want to keep. You have to know what the data is showing you. You can't just rely on your emotions.
Now, let's kind of rephrase that then, because I believe we find value when we're helping people build out a divorce financial portrait or a financial portrait. If people aren't getting divorced, a post-nuptial agreement or whatever it is. I believe that we do find value in speaking with their financial planners to talk about, well, what are their goals? And will this divorce settlement, what we believe is fair and equitable, does this support their future goals? And we cover that a lot in our work with them. But if they're being, after divorce, they'll continue their work with their financial planner. And having that discussion if a financial planner is already in place is important. But I think you're talking about financial planning of leveraging your investments. I think that's what you're saying, right?
Right. Don't choose an asset because you want to keep that asset because you think that's your financial plan moving forward. Because you have to really know what the impact to keeping any asset is in your overall negotiation.
Exactly. So, Catherine, I think a lot of times people in the beginning of divorce, they will withdraw money from accounts or whether it's a retirement account because their attorney told them that that's how you can pay for attorney's fees, or whether it's an investment account or whatever it may be, spending down assets for various reasons without understanding the financial impact. And I think that kind of goes into the financial planning space as well, because if you're doing things that are going to negatively impact you in the future, you should definitely have a knowing or knowledge about that.
Oh, totally. And that's where their financial planner is very handy because, there's a cost basis to some of your accounts. And you could make a costly mistake, not only in the liquidation, but in the taxes that would be due.
Yeah. And you can make a costly mistake in divorce planning, right? Because you could be charged, for lack of a better word, with, dissipating that asset or manipulating that asset in a way that, you would have a consequence for in the divorce decree. So you should be very, very knowledgeable about any money, any cash flow, any access to your investment accounts during the divorce process.
And what you're using that money for. It just baffles me that people spend this money thinking they're going to get it back and they don't get it back. So you have to really make sure you're in line with a strategy that you believe in or that you have the support of some legal advice there before you do that.
And if your spouse is withdrawing money, you need to document that and tell your attorney or your mediator in a way that they can adopt the information. Believe me, mediators and attorneys hear all day, every day, my spouse did this, my spouse did that, and they don't know what to do with the information. And again, the MDS financial portrait takes that information and applies it to division scenarios in a way that either your attorney or mediator can adopt in your settlement discussion. So really be careful about that too. All right. Mistake number 2, agreeing to a settlement just to get it over with. First of all, that can be a tactic, right? Of what we call the main wage earner of the home. It's a well-known tactic that they just wear out the other side until they throw up their hands and, I'm done. But it's really not a good idea.
And then they also make promises of things that sound good because they know what you want. So you're like, okay, that sounds good. That's exactly what I want. Oh, he or she's being so nice about it. I should do this now. Well, things change as soon as you sign on that dotted line. And there's no way to go back with that. So don't agree with things just to get over with it. Everyone's always looking for that light at the end of the tunnel. And I totally get it. I was there. But take the time you need now because your future depends on it, basically.
Right. And how many times do we hear someone say, well, I'm not going to go after that asset. I'm not going to go after my spouse's business, or I'm not going to go after my spouse's pension plan because that's his or hers. And, I get that. And we consistently say, you can have that opinion and we'll adopt that opinion only after you go through and understand the financial impact of that opinion. Because typically when people say that, they have no idea what it means because it's emotionally driven or driven out of guilt or obligation or whatever it may be. So be very careful about these agreements for whatever reason you decide to agree without knowing the financial impact.
Yeah. And, sometimes knowing the impact is knowing what you don't know too. But as long as you know you don't have that information, then, okay, you can settle it in your mind, but don't just do it to get it over with.
All right. So mistake number 3 is overlooking future expenses. So, this happens often, or worse, it's brought up at the mediation table or the settlement table or at a settlement conference. All of a sudden, well, what about tax liabilities? What about the cost of a quadro? What about all of these things, extra expenses that could incur in a settlement that you have A, no knowledge about, and B, no one's ever brought up to you? That's a huge, huge mistake.
And who's going to initiate doing all of those tasks? Like who's preparing the quadro? Who is transferring the retirement accounts? Who's sending the letter to the financial advisor? Like you have to have a plan on who's closing your credit cards, who's closing your bank accounts that are jointly held. You have to have a plan on what's happening, or otherwise it doesn't happen.
Yeah, absolutely. Regarding those quadros, a lot of attorneys will just refer someone that they use all the time, which is not always bad, but it's typically way more expensive because the quadro preparer will send it to the attorney for review, and then it's got to be processed, and they're typically fairly expensive. So if you and your spouse are able to get a quadro preparer that you can hire, and they can walk you through that process, it is typically much less expensive, up to 50% less expensive. That's our experience with our clients.
Hmm. And the future expenses for your children, if you have them, like weddings and college and cars and cell phones, depending on the age of your children, that's never discussed. So who pays for that?
It's a thing.
It's a
Yeah.
thing.
Yeah. And you need to know, to that point, child support, doesn't cover the shared expenses. And you need to make sure you cover that with a fine tooth comb,
Hmm.
now and in the future. All right.
And alimony is not supposed to cover that either. Alimony is to keep your lifestyle what you're accustomed to, basically, until you can support yourself. But you're not supposed to pay for your kids' college or your kids' weddings and other big events with your alimony. You're supposed to contribute to it, but you should have that laid out in your agreement.
Exactly. All right. Mistake number 4, attempting to devalue assets prior to divorce. I think I talked about this earlier in one of the earlier mistakes, but you should know that during divorce, sometimes there's what's called ex parte orders or other agreements or other interim orders that, say you cannot touch your accounts for any reason other than status quo. And so your finances are carefully monitored and scrutinized. So you should be aware of that, not only for yourself, but for what your spouse is spending. So before you withdraw money, or use money for large expenses, moving assets around, reinvesting money, creating other accounts, you need to know what the financial impact of that could be to you.
Here's a
Um,
big one, and it just came across yesterday again. Oftentimes, people will take advance to equitable distribution, meaning they have an account, let's just say, that has $100,000 in it. One spouse takes $50,000 to set up a new place to live, but that's considered, or buy a new home. They might take a lump sum money out, and that's considered an advance to equitable distribution if the parties agree to that. And I see that happening a lot, and it's totally fine. So yesterday I came across someone who took a lump sum of money out to purchase a new home. And now spouse wants the appreciation of that home. They don't want just the amount taken out now as equitable
oh my
distribution.
gosh.
They want the house valued now, and they want the difference of that as equitable distribution. So it'll be interesting to see how that one plays out. So
Yeah.
in conclusion to what we're saying here about that, it is make sure you have an agreement and you two put something in writing when you do something like that, just to protect yourselves.
Well, and in further conclusion, Catherine, even if you do have an agreement, you need to understand the financial impact. Because
Yeah.
if you're dividing cash, which leaves you very cash poor at the, eventual settlement table, how are you going to balance that balance sheet? How are you going to make it all work if you've already divided, or if you reconcile, or if there's a delay in your divorce and you've already divided that account? It could have future impact that's not beneficial to you.
Yeah. Remember, you want to streamline this process if you can. You do not want to make it messier.
Yeah. And sometimes, someone will say, well, let's divide this account because that's the largest marital account. Then you have trouble getting to the finish line because you can't get the spouse to engage to get over the finish line because they have what they want. So just be very careful in those spaces.
That's so true. That happens so often.
Mhm. Mistake number 5, not updating your beneficiaries and estate plan. So every state is different. Everyone needs to know that. So it is very important that you have a consult with your family attorney about this, your family law attorney, but also an estate planning attorney. So you know when to change beneficiaries, to change your will, to change your estate planning plan. So it's a conversation to have. So don't just run an update without understanding, again, the impact. So, this says the mistake is not updating. but it's very important that you do it with intention and knowledge about what that updating means to your divorce in the event a spouse dies during the pendency, things like that. Those are the things that you need to talk about.
And some are really easy. All your retirement plans, they come with a named beneficiary. So contact your plan holder and just change your beneficiary. It doesn't cost you anything to do it there. And now even at banks, you could do transfer on death for a lot of your accounts. So if you're worried about going to have your whole estate plan done right away, you can take immediate action to do some of the simple things right away.
Exactly. Okay, mistake number 6, not seeking all the help you may need. One of the most valuable assets during a divorce is your divorce team. Very important. And, I want to say your divorce team, not your attorney's divorce team. There's a big difference there. So typically when you hire an attorney, especially in higher net worth states, or even in, midstream America, get a forensic for a business valuation, get a forensic for tracing dissipation of assets or whatever it may be. And so they'll say, get these other experts on your team. But what you need to know is those experts are working for your attorney, or they're dual experts that are doing valuations that both parties are sharing in. So that's not particularly your team, because they're not going to help you understand the financial impact of that valuation to you moving forward. And that's why we say your team. Get your team together, a divorce coach, your attorney, your mediator, whoever, and make sure that their agenda is to help you understand the impact, not necessarily get an evaluation for the court's benefit or for anyone else's benefit. It's a really important differentiation there.
I mean, that was perfectly said. I don't really have much to add other than remember that these individuals work for you. And if they make you feel less than at any time, they might not be the right professional for you.
100%.
So thank you for joining us on this episode, 6 Financial Mistakes to Avoid When Divorcing. Stay tuned for future episodes as we continue to unravel the fascinating world of finances and divorce. Remember, knowledge is power.
Disclaimer: this information provided in this podcast is for educational and informational purposes only and should not be considered as financial or legal advice. Please consult with professionals in the relevant fields for personalized guidance.
Thanks for joining us on another episode of We Chat Divorce. We hope this episode was informative and supportive on your divorce journey. If you're looking for more support for navigating divorce with confidence and clarity, head over to mydivorcesolution.com for more podcast episodes, divorce events, and resources for your divorce. We'll see you back here for our next episode.